Is it too late to own Bitcoin? That question usually doesn't come from curiosity. It comes from regret. Regret for not buying when Bitcoin was a few $100s. Regret for ignoring it when it was called a joke, a scam, a bubble. Regret for hearing about it early and doing nothing. So when people ask whether it's too late, they're not really asking about Bitcoin. They're asking whether they've already missed their chance to be smart, early, or ahead of everyone else. And that's where the problem begins. Because too late is not a financial concept. It's an emotional one. When someone says it's too late, what they really mean is, I wish I had bought it cheaper. I wish I could go back in time. I don't want to feel foolish for entering after others already made money. But markets don't care about our wishes. And Bitcoin certainly doesn't. Here's an uncomfortable truth most people don't like to hear. When Bitcoin was cheap, you wouldn't have bought it anyway. Not because you were stupid, but because you didn't understand it. When Bitcoin was $100, it looked ridiculous. When it was $1,000, it looked dangerous. When it was $10,000, it looked like a bubble. And every time it fell hard, people felt relieved they dodged a bullet. Understanding always comes late. Conviction always comes after price. So asking, is it too late, assumes that price is the main obstacle. It's not. The real obstacle has always been belief. Think about it honestly. If Bitcoin suddenly dropped back to $5,000 tomorrow, would most people rush in? No. They would say, see, I knew it, it's collapsing. And they would wait for it to go lower and lower until fear fully takes over. This is why the idea of being early is mostly a myth. Early doesn't feel early. Early feels stupid, lonely, and terrifying. People who bought Bitcoin early weren't rewarded for their timing. They were rewarded for enduring doubt longer than others. So maybe the better question isn't, is it too late to own Bitcoin? Maybe the real question is, why do I feel late? Because feeling late usually means you're comparing yourself to someone else's outcome, not your own understanding. And that's dangerous. Bitcoin doesn't care when you first heard about it. It doesn't care how much regret you carry. It doesn't even care whether you believe in it or not. It just exists, ticking along, producing blocks, following rules that haven't changed to accommodate anyone's emotions. The market price, on the other hand, is where emotions show up. That's where fear, greed, hope, and despair collide. When price goes up fast, people feel late. When price collapses, people feel relieved until it recovers without them. This emotional loop has repeated for more than a decade. And every cycle creates the same illusion that there was a perfect time in the past and now it's gone forever. But if timing were the key factor, Bitcoin would have stopped growing years ago. No one would buy at higher prices. Adoption would freeze. Yet adoption hasn't stopped. Institutions didn't buy at $100. Companies didn't put Bitcoin on their balance sheets at $1,000. Entire countries didn't start mining and regulating it at $5,000. They moved when understanding caught up with necessity. Which brings us to something most people avoid admitting. The question, is it too late, is often a way to avoid responsibility. Because if it's too late, then you don't have to decide. You don't have to learn. You don't have to risk being wrong. You can stay safely on the sidelines, telling yourself the opportunity is gone. But Bitcoin has never been about comfort. It has always been about confronting uncomfortable truths about money, trust, and control. And that confrontation doesn't happen all at once. It happens gradually, painfully, often after watching price move without you. So before asking whether it's too late to own Bitcoin, there's a more important question hiding underneath. What exactly do I think Bitcoin is? Is it just a chart that already went up too much? Or is it a monetary system that behaves differently from everything you've known? Because if you see Bitcoin only as a price that already ran, then yes, emotionally, you'll always feel late. But if you begin to see it as something still unfolding, something still misunderstood by most of the world, then the idea of too late starts to lose its meaning. And that's where this conversation really begins. Most people think the hardest part of owning Bitcoin is deciding when to buy. It isn't. The hardest part is deciding what you'll do after you buy, especially when the price turns against you, because sooner or later, it always does. Bitcoin doesn't move in gentle lines. It moves in violent waves. It surges, it collapses, it recovers, and then it does it all over again, leaving behind a trail of headlines declaring its death. Bitcoin has fallen more than 50% multiple times. It has fallen 70%. It has fallen over 80%. And every single time, people said this time is different. What's fascinating is not that Bitcoin crashes. What's fascinating is how predictable human behavior becomes when it does. When the price drops 10%, people get nervous. At 30%, they start questioning their decision. At 50%, they panic. At 70%, they convince themselves they were fools for ever believing in it. And right there, at that exact moment, is where the real question lives. What would you do if Bitcoin dropped 50%? What would you do if it dropped 70%? If you don't have a clear answer to that, then you don't yet have an answer to whether you should own Bitcoin at all. Because timing doesn't protect you from volatility. Understanding does. Many people say they're waiting for a better entry. But what they're really waiting for is emotional safety. They want confirmation that they're right before they commit. They want certainty in a system that offers none. Bitcoin doesn't reward that mindset. If you buy Bitcoin only because the price is going up, then a crash will feel like betrayal. You'll feel tricked, you'll feel stupid, and you'll look for someone to blame: markets, whales, institutions, or Bitcoin itself. But if you buy Bitcoin because you understand why it exists, a crash becomes something else entirely. It becomes a stress test, a mirror, a moment that forces you to confront whether you truly believed what you thought you believed. This is why price alone is such a dangerous teacher. It teaches confidence on the way up and fear on the way down, without ever explaining what's actually happening underneath. Bitcoin doesn't stop working when the price falls. Blocks don't slow down. Transactions don't reverse. The network doesn't ask for permission to continue. Only sentiment collapses. And sentiment is not the same thing as value. Most people don't lose money in Bitcoin because they bought too late. They lose money because they bought without conviction and sold to relieve emotional pain. They weren't wrong about Bitcoin. They were unprepared for themselves. This is why the question you must answer is brutally simple, yet deeply uncomfortable. If Bitcoin drops 50% tomorrow, do I panic? Or do I understand why I'm holding it? If it drops 70%, do I feel regret? Or do I feel tested? Your answer to that question reveals everything. If the thought of a 70% drop makes you feel sick, anxious, unable to sleep, then Bitcoin is already telling you something important. You're taking more risk than you can emotionally handle. And that's not a moral failure. It's a mismatch. Bitcoin doesn't ask you to be fearless. It asks you to be honest. Honest about your time horizon. Honest about your financial situation. Honest about how much uncertainty you can live with. The market doesn't care whether you feel ready, but your mental health should. This is where the idea of too late collapses completely. Because someone who buys Bitcoin at a higher price, but can calmly hold through a 70% drawdown, is far better positioned than someone who bought early and sold in panic. Ownership is not defined by entry price. It's defined by endurance. The irony is that many people who feel late today would still sell at the worst possible moment tomorrow, and then, years later, they would ask the same question again. Is it too late now? Not realizing that the real barrier was never the chart, it was the lack of a plan for pain. If you can't clearly articulate what you'll do when Bitcoin is cut in half, then the answer isn't that it's too late. The answer is that you're not ready yet. And that's okay. Because readiness doesn't come from watching price movements. It comes from understanding what kind of asset Bitcoin truly is and what it demands from those who choose to hold it. Only when you can answer that question calmly does the idea of too late finally lose its power. At some point, if you stay around Bitcoin long enough, the conversation stops being about charts. It has to. Because charts can't explain why people keep coming back after losing money. They can't explain why developers keep building during bear markets. They can't explain why the network keeps growing when public interest disappears. Price tells you what people feel. Bitcoin tells you what the system is. And that difference matters. For most people, investing means predicting. Predicting growth, predicting adoption, predicting that the price will be higher later than it is today. Bitcoin quietly rejects that framework. People who truly hold Bitcoin over long periods aren't doing it because they're confident in a price target. They're doing it because they've lost confidence in the alternatives. That's a subtle but crucial distinction. Bitcoin doesn't require you to believe it will succeed. It only requires you to question whether the existing system deserves your full trust. Modern money is built on expansion, more debt, more liquidity, more intervention. Over time, that expansion quietly erodes purchasing power, not in dramatic crashes, but in slow, almost invisible ways. You don't wake up one day and feel poor. You just notice that things cost more, savings stretch less, and long-term planning feels harder than it used to. Bitcoin enters this picture not as a perfect solution, but as a different one. A system with rules that don't bend for emergencies. A monetary policy that doesn't respond to elections, wars, or panic. A network that doesn't ask who you are before it lets you participate. When people begin to understand this, the question of timing changes completely. Because you're no longer asking, will Bitcoin go up? You're asking, do I want some portion of my life savings inside a system like this? That's not a trading question. That's a values question. And values don't depend on short-term price movements. This is why the people who hold Bitcoin through brutal drawdowns often sound calm, almost detached. They're not immune to fear. They're anchored to a different reference point. When Bitcoin drops 50% or 70%, they don't immediately think, I was wrong. They think, has anything fundamentally changed? Is the network still running? Are blocks still being produced? Is the supply still capped? Is the system still open and permissionless? If the answers are yes, then the drop becomes noise, not a verdict. That doesn't mean price doesn't matter. It means price is no longer the foundation of the decision. This is where many people get confused. They assume Bitcoin holders are blindly optimistic. In reality, many of them are deeply skeptical, just not in the way markets expect. They're skeptical of central planning, skeptical of infinite monetary expansion, skeptical of systems that require trust without transparency. Bitcoin doesn't ask you to abandon the world you live in. It offers you an alternative running quietly alongside it. Owning Bitcoin, even in small amounts, is a way of saying, I'm not certain this system will fail, but I'm not willing to assume it won't. That mindset doesn't require perfect timing. It requires intellectual humility. And humility is rare in financial markets. Most people want certainty before commitment. Bitcoin asks for commitment in the presence of uncertainty. That's why the idea of being too late misses the point entirely. You're not trying to catch a wave at the exact peak. You're deciding whether you want exposure to a system that operates by different rules. And that decision doesn't expire on a calendar. If Bitcoin were simply a speculative asset, the story would have ended long ago. Speculation doesn't survive repeated 70% crashes without something deeper underneath. What survives is belief grounded in understanding, not hype. This brings us back, once again, to that uncomfortable question. What would you do if Bitcoin dropped 50%? What would you do if it dropped 70%? If your answer is based purely on price, then you're still playing a prediction game. But if your answer is rooted in why you own it in the first place, then you're no longer asking whether it's too late. You're asking whether this philosophy makes sense to you. And that's a far more important conversation. So, is it too late to own Bitcoin? After everything we've explored, that question starts to feel strangely empty. Not because it's foolish, but because it points in the wrong direction. Bitcoin doesn't ask you when you found it. It asks you who you become when certainty disappears. Every person who seriously engages with Bitcoin eventually reaches the same crossroads. Not at a specific price, not during a specific year, but at a psychological moment. A moment where you realize that no one can decide this for you. Not analysts, not influencers, not headlines screaming euphoria or doom. Just you. Bitcoin has a way of stripping away excuses. If the price goes up and you didn't buy, regret shows up. If the price goes down and you did buy, fear shows up. Either way, something inside you gets exposed. This is why Bitcoin feels different from other investments. It doesn't just test your capital, it tests your identity. Are you someone who needs certainty before acting? Or someone who can make peace with incomplete information? Are you chasing validation from being early? Or are you building conviction slowly, even when no one applauds? These questions don't have right or wrong answers, but they do have consequences. Because Bitcoin doesn't reward intelligence alone, it rewards emotional alignment. The people who suffer the most in Bitcoin are not the least informed. They are the most conflicted. They understand just enough to get involved, but not enough to stay calm. They believe just enough to buy, but not enough to hold. And when Bitcoin drops 50% or 70%, the internal tension becomes unbearable. That's why this single question matters more than anything else. What will you do when Bitcoin falls 50%? What will you do when it falls 70%? Not hypothetically, not bravely, but honestly. If your answer is panic, self-blame, sleepless nights, and impulsive selling, then Bitcoin is giving you a warning, not an invitation. It's telling you that the problem is not the timing, it's the mismatch between your expectations and reality. But if your answer is calm acceptance, if you've already made peace with volatility before it arrives, then something powerful happens. You stop asking strangers whether it's too late. You stop searching for reassurance. You stop needing permission because you've already answered the only question that matters. At that point, owning Bitcoin is no longer about making money fast. It becomes about positioning yourself thoughtfully in an uncertain world. You don't need to go all in. You don't need to convince anyone else. You don't even need to be right in the short term. You just need to be coherent with yourself. Bitcoin doesn't demand belief. It demands self-awareness. It forces you to confront how you relate to risk, time, and responsibility. And in that sense, Bitcoin is less like an asset and more like a mirror. It reflects impatience as pain. It reflects discipline as resilience. It reflects fear as volatility. So is it too late to own Bitcoin? If you're looking for a guarantee, it's always too late. If you're looking for comfort, it's never the right time. But if you're willing to ask yourself hard questions and sit with uncomfortable answers, then timing fades into the background. Because when you know exactly what you'll do if Bitcoin drops 50% or 70%, you already have your answer. Not about Bitcoin, about yourself.